Ladies and gentlemen, welcome back to Driven Wyld. Today we are talking about the Earned Income Tax Credit. One of the best ways to reduce your liability is through tax credits. And one of those tax credits is the Earned Income Tax Credit. However, not all tax credits are created equal, and in this case, this could be helpful to you or hurtful to you depending on your situation. So with that said, we are talking about everything you must know about the Earned Income Tax Credit, who qualifies, some pitfalls that come with it, and everything in between. But before we do that, let's go over a quick disclaimer. The content of this video does not contain is never intended to be legal, business, financial, tax, or health advice of any kind. This video is for entertainment purposes only. It is advised that you conduct your own research and consult qualified professionals before applying anything you find online. Also, thank you to GigTax for verifying this information and making this video possible. What is the Earned Income Tax Credit? The Earned Income Tax Credit is a tax break for low and moderate income workers. To qualify, you have to have worked in the year which you have claiming the credit, earned at least $1, and your income must be below a certain threshold. Now, the first two qualifications, if you're not doing that, you haven't earned income. What are you doing? In terms of being below a certain threshold, that's a different conversation. The Earned Income Credit is a refundable tax credit. This means that taxpayers who qualify for this credit can lower their taxes owed by the corresponding credit amount. In cases where the credit amount is more than the taxes owed to the government, it can result in a refund for the extra amount. How does the Earned Income Credit work? To claim the Earned Income Tax Credit, you have to meet income qualifications and cannot make over a certain amount of investment income. You don't have to have a child to claim the credit, but generally the more children you have, the higher the credit amount will be. So earning fuck trophies will have some benefits too, I guess. If you claim the income credit on your tax return, the IRS cannot issue your refund until mid-February by law. If you were an early filer who was due to an EITC refund in 2024, the earliest you could have received those funds was February 27th. If you chose direct deposit as your refund method, e-filed, and your return had no errors whatsoever. Now, for gig workers, that isn't much of an issue since we're waiting for our 1099s and all of the other tax forms we're waiting for, but for someone who's an employee with nothing else, this may be beneficial to know. That said, how much you qualify for can vary from year to year and is on a case-by-case basis. But for perspective, in 2023, a single filer with no kids can earn $600 credit at maximum value, whereas some married couple filing jointly with 3 kids can receive a $7,430 credit. This even went up this year and updates from year to year. So that said, make sure you check with your qualified tax professional on what options and opportunities are available to you, as well as the values you can receive. How to qualify for the Earned Income Credit. To qualify for the EIC, you must have made at least $1 of earned income, which if you cannot earn a single dollar within the course of a year, you got bigger problems with than just tax credits. I'm just saying. That said, there are also other rules, and here are the big ones. An investment income cap. Your investment income must be $11,000 or less in 2023. In 2024, that figure rises to $11,600. Remember, unrealized capital gains is not income, so this isn't an excuse to not invest properly, but that's a different video. Foreign income, you must not have to file a Form 2555, Foreign Earned Income, or Form 255EZ, Foreign Earned Income Exclusion. So for those participating in Forex trading, you're kind of SOL in that regard. For those participating in cryptocurrency, however, the IRS considers Bitcoin to be property and not currency in terms of tax purposes. So in this category, you're in the clear until something changes in that regard. So if you're a crypto bro, good for you. Age. If you're claiming the EITC without qualifying children, you must be at least 25 years old, but not older than 65. So you got a 40-year window there. If you're claiming jointly without a child, only one spouse needs to meet the age requirement. So if you're a 66-year-old guy with a 26-year-old sugar baby, you got an opportunity there. Oh, that is so bad. Older Gen Z, as of this recording, you scrape in. Mid-Gen Z and younger, you're kinda SOL until you grow up a little bit more. I felt so old looking that up, I swear. Special rules for separated couples. You can qualify for the EITC if you're separated but still married. To do so, you can't file a joint tax return and your child must live with you for more than half the year. You also must not have lived with your spouse during this last 6 months, or you must have a separation agreement or decree. So if you threw your husband out of your house for sleeping with your babysitter Brenda, your slutty next door neighbor, you may still qualify. Just make sure you do your homework before making any moves. There are special earned income credit rules for members of the military and the clergy, as well as people who have disability income or who have children with disabilities. But make sure you talk with your tax professional about that as well. Who counts as a qualifying child for the earned income credit? You gotta love these fun terms like qualifying child, because it can never be as simple as spawning a little semen demon and being qualified, right? That said, if you claim one child or more as part of your earned income credit, each of them must pass certain tests to qualify. The child must be your biological child, adopted child, stepchild, foster child, or grandchild. The child can also be your sibling, half-sibling, step-sibling, or any of their children. I had a friend, Nick, who lived with their older brother, Eddie, for a while, who would have qualified for this while he was under his care. The child must be under 19 at the end of the year and younger than you or your spouse if you are filing jointly, or the child must be under 24 if they were a full-time student. There's no age limit for children who are permanently and totally disabled. So my stepfather would have been able to use this when I was younger and while I was going to college, but now that I'm 32 and very far out of college, same with my friend Nick, once he aged out, we are no longer qualified to be a qualifying child. The child must have lived with you or your spouse in the United States for more than half the year. Again, if they move out or live elsewhere, you're not qualified. Duh. Claiming the EITC without a child. Now, as we have heard before, just because you don't have a crotch goblin doesn't mean you can't access this tax credit. You may be able to get the EITC if you have a qualifying child, but you meet the income requirements for your filing status. To qualify, you typically must meet 3 or more conditions. You must have resided in the United States for more than half the year. I feel like with how the topic of migrants has infiltrated the major topics of the gig economy, there are letting out a silent cheer for that, but that's a different story. No one can claim you as a dependent or a qualifying child on their tax return. Yes, in order for you to claim dependents, you must be independent yourself. So for those of you letting that bad boy get you pregnant in high school because
there was just something about them,
you might be SOL here. But let's be honest, you were in high school, you didn't even know what a tax credit was, so heck, you probably didn't even know about taxes at all. That said, however, your parents might be able to write off their grandkids because of that, and they should, because they probably play an important role in making sure your kid is raised at all. You must be at least 25 years old, but not older than 64. If you're married filing jointly, at least one spouse must meet the age requirement, which is the same requirement as before. How to claim the earned income tax credit. You could claim the earned income credit on your annual tax return, Form 1040 or Form 1040 SR. Taxpayers who have dependent qualifying children also have to fill out Schedule EIC, which asks for information about their child, including their social security number, birth year, and more. Of course, make sure you're preventing errors by working with a qualified tax professional to help guide you through some of the errors that can take place to make sure you are not setting yourself up for an audit. Consequences of an EIC-related error. Not only does an error on your tax form delay the EIC part of your refund, sometimes for several months, but also means the IRS could deny the entire earned income credit and even set you up for an audit. If the IRS denies your whole EIC claim, you must pay back any EIC amount you've been paid in error, plus interest. You might need to file Form 8862, information to claim certain credits after disallowance before you could claim the EIC again. You could be banned from claiming EITC for the next 2 years if the IRS finds you filed your return with reckless and intentional disregard of the rules. You could be banned from claiming EITC for the next 10 years if the IRS finds you filed your return fraudulently. That's a lot of ban time. Again, most tax software walks you through the EITC with the series of interview questions, greatly simplifying the process. But remember, even if somebody prepares your return for you, the IRS holds you responsible for any and all information you submit. Remember, the IRS just received a lot of funding and had a significant hiring boost, which they say is to hold millionaires to large corporations accountable, and I am sure there is some allocation towards that. But remember, which is an easier target for the IRS? A huge corporation like Amazon or Apple with lawyers that will fight forever if they have to? Or some struggling family who they could bully money out of? Let's be realistic. Can I still get a past year's earned income tax credit? If you didn't claim the earned income credit when you filed your taxes last 3 years, but you think you qualified for it, the IRS encourages you to file an amended tax return so you can get that money back. However, in order to make sure that you are staying IRS compliant and keeping yourself away from any possibility of being audited, as this credit can normally increase your chances of, it is important to consult with a tax professional to make sure you are qualified and filing correctly. That said, it's also important to choose the proper tax professional that won't overcharge you either, especially gig workers who have as many 1099s as they do and can even charge you for each extra one. So to save you time, energy, and money, GigTax is here to help. Filing your taxes on time, promptly, and accurately is an inevitable aspect of being in business for yourself. And for every hour spent navigating tax season alone, you miss out on potential earnings, precious moments with loved ones, and expose yourself to financial risks. Recognized as the leading tax preparation service for gig workers, GigTax is dedicated to simplifying the process, saving you time, energy, and money. Founded by Joseph Mayo, a seasoned gig worker with 6,500 deliveries across 7 platforms since 2020, GigTax addresses the overlooked, overcharged, and underserved needs of gig workers in the financial realm. Driven Wyld subscribers can take advantage of an exclusive 77% discount on GigTax's tax prep, bringing the price from $538 to $124. Act now to get this price before GigTax's calendar is booked, because GigTax helps those just like you make the wisest and most effective decisions on your business and personal tax needs all year round. Secure your spot today with GigTax using the description link below to their Instagram page, slide into his DMs with the word wild, and get back to what you do best, making the most amount of money in the least amount of time in the safest possible way. Thank you so much for watching. I really appreciate it. As always, make sure to hit the like button, subscribe if you're new, and I'll see you guys next time. Peace.